Welcome, welcome everyone.
Hey guys, how's it going?
Hi everyone, thanks for joining us.
Hello, good evening, everyone.
Right, here we go. David Layden,
So
nice
David,
to see you. What do we have in here? Hi Hazel, thanks for joining us.
Hey, Sam Ball, thanks for joining. Good to see you here.
Hi Elsie, thanks for coming.
great to see all you guys here today.
We'll give it a couple of more minutes. I know that we've got a lot of people here trickling in. Looks like we've got a big crowd tonight.
Yeah, just want to give everyone an opportunity to get their audios correct and everything going. OBS, see you in here. Nice to have you. Good to see you.
Quentin, nice to see you. Teresa, thanks for joining us.
Hey TK.
All right, I have a quick question. Before we actually get started and really dive into why y'all are here, I want to know where everyone's coming from. Some people are saying good afternoon. Some people are saying good evening. I want to know where everyone is. So if you guys don't mind, jump in the chat and tell me where you are. Are you on the East Coast? Where are you guys at?
Yeah,
Hawaii. Oh,
San Diego.
nice.
Okay.
Wow, West Coast. Okay, we got some East Coast. Augusta, Georgia, Gastonia.
Fountain Hills.
Jim, so good to see you, dude.
John, brother. Phoenix, Denver. Love that.
Oh man, you guys are
All
coming.
right, awesome. All over the place. Yeah, that's good.
Nice. Florida is representing. That
Big
is for sure. That is awesome.
Miami.
Las Vegas. Love it. Love it. Welcome, everyone. All right. I think we can get
So you guys are probably wondering, who are all these faces here? I'm Yannick, co-founder and managing partner of Jewelstone Capital Partners. This is Marichelle, also co-founder, a manager partner of Jewelstone Capital Partners. You have Melissa Forbush. Say hi, Melissa. Representing MFCP, Multifamily Capital Partners. We have Rishab and Marcus here as well, guys. Say what's up.
Hey, how's it going?
Hello, everyone.
It's the dream team.
It is the dream team, guys. You have arrived. Thank you all for coming in today. James Zelinsky, I see you.
Jamal's here. Thanks for joining, Jamal. So many still joining. Wow.
Yeah,
This
we'll
is
let
fantastic.
everyone trickle in here. We'll get
Of course,
started in a minute.
JB is here as always, supporting. Tell us, Yannick, what are we going to cover tonight?
So first and foremost, guys, thank you for joining us today. Some of you may know, certain individuals that you see in front of you here. Everyone on this call knows one of us, and so you guys are very lucky and blessed, as we are, to be with you all today. What we do is we're multifamily real estate investors, as you guys know, and that's why you're here today, to talk a little bit about a great opportunity that we have that we want to share with you. Just so you know, the webinar itself is going to take around 45 minutes, about 30 minutes for the presentation, and we'll leave about 15 minutes, 20 minutes for questions and answers. I know that a lot of the questions are going to come up sporadically. Please go ahead and put them in the chat. If we do not get to you, we apologize, but I will say this: if you put it in the Q&A, we will have the ability to kind of see that in real time, and we'll get to those questions that you have first, okay?
Awesome. All right, well, it looks like we've got almost everyone here, so we ready to get started?
We are ready to get started.
That works.
Am I the only one that immediately thinks of the song, Get the Party Started? I mean, I won't keep singing for everyone. I'll refrain, but it's definitely
go ahead,
going in my
go.
mind.
No, I love it. I love to hear
A
it.
little bit of disclosure, if Melissa does break out in song, do not be surprised. This- Oh, and the wizard has joined. I see you, Ryan.
What's up, Ryan? So again, guys, thank you. Thank you for joining us. We're so thankful to be able to share this investment opportunity with you today. We are so grateful for the relationships that we've been able to build in the Florida market with brokers, property managers, and investors just like yourself. It's through these deepened relationships that we even found this gem, Orlando Sky. We were interviewing a property management company for a similar built property that we were exploring, and the property manager shared Orlando Sky with us. It's about an hour and a half away from where we were getting ready to take a look at that initial property with that broker. The broker shared that this is a smaller ownership team that they just weren't able at the time to manage the asset to the business plan effectively, which shows with the significant rents that are so far below market competition, leaving us with a huge opportunity. And that's why we're so excited to talk with you guys today about that. So without further ado, what we'll do is we'll get into it. So our team has performed a thorough and conservative underwriting on these multifamily apartments in sunny Orlando, Florida, to create a strong business plan to drive investor results. Orlando Sky is currently a 506B offering available to accredited and sophisticated investors on a first come, first served basis. You're here today because you personally know a member of our management team. And so look, guys, some of you are gonna want a lot of details. Some of you are gonna be ready to pull the trigger right away and just maybe want some highlights. So feel free to skip ahead if you need to, but we are gonna go through this with a fine tooth comb for you. So, some basic housekeeping before we go into details on the property. The information contained in this presentation is considered confidential and is solely for the use of prospective investors to determine the level of interest in the Orlando Sky property in Florida. The opportunity to participate is open to both accredited and sophisticated investors. While the information contained in the presentation has been compiled from sources we believe to be reliable, neither the sponsors nor the representatives make any representations or warranties as to the completeness of the information contained herein. All financial information and projections are provided for reference only and are based on assumptions relating to the general economy, market conditions, and other factors beyond our control. The investment is liquid, and only those persons that are able and willing to risk their investment should participate. Prospective investors are encouraged to conduct their own independent due diligence investigation, review financial projections, and consult with their legal, tax, and other professional advisors before making any investment decision.
Yeah.
All right, guys, let's dig in. Just as an outline.
No, I think I want you to go back through and read those disclaimers one more time. I mean,
Okay.
no, just kidding.
All right,
Faster now.
so guys, it's the outline of the business plan. So really, it's a bullet point of highlights, investment returns and projections. We're going to go through the Orlando market, and then we'll talk some next steps. Some of you want to get all the details, and some of you just, again, want some of the highlights. For those that don't want all the details, feel free to proceed to the investor portal link in the chat to complete your subscription process. All right, guys. Here's the team. This is the dream team. Very important to know how strong our leadership team is to understand the effectiveness and as operators to drive a business plan and meet the targets. So lead sponsors for Orlando Sky Multifamily Capital Partners, Tyler Devereaux and Ryan Woolley. MFCP manages over 3,700 units with over 390 million spanning across 5 states. Together, they also own Multifamily Mindset, an education program for new and seasoned investors for training and support needed to acquire multifamily properties. Joining me today is one of the co-sponsors, Melissa Forbush and Lindsay Daniels, who continues to lead the managing team. We also have Rishab, New Life Capital Group. Rishab began his real estate journey in single family rentals before expanding into multifamily. With a background in engineering and project management, Rishab specializes in underwriting and acquisitions. We also have Marichelle Matthews here and myself, managing partners of Jewelstone Capital Partners. We've closed over $4 million in multifamily assets in the last quarter, with over a combination of 40+ years of corporate client management and B2B business development for Fortune companies. Their teams oversee investor relations and capital expenditures. Some of the key principles important to recognize our support team, which is Jim Bone, which is here with us today, Marcus Turner from Inspire T Investments, D'Amico and Quentin Mack from Mack Property Solutions. Together, this managing team brings the success, experience, and strategic emerging market expertise that can find revenue generating opportunities for investors. Additionally, more detailed bios will be available to you in the business plan as we dive in.
Before we go any further, I'm just curious, before we dive into the nitty gritty of the property and why y'all are here, I want to know who came with who. How many of you know Marichelle and Yannick? How many of you know Rishab? How many of you know Marcus? I'd love to have put your answers in the chat. Let us know who you came from. Jimbo. Oh, Jimbo. Love it. Marcus. Jim Bone, man, JB's a good man. Yeah, oh man. Yeah, see, you guys know. Michelle and Yannick, I love it. Nice. You guys, this is an awesome mix here. That's awesome.
No,
I love it. This is called teamwork. Okay, now I won't sidetrack. You can dive back in.
All right. Yeah. So we'll go to some of the investment highlights, guys. All right, so Orlando Sky, 140 units, minutes from the downtown Orlando, nestled in mature Northwest residential neighborhood. Florida is such a highly desirable area, guys. The Orlando MSA has continued to expand, creating a demand for properties where other buyers are willing to overpay to start creating a footprint in the area. Thankfully, with the relationships that we have quickly built in the industry and local market, we're able to come to find Orlando Sky. The sellers were looking for a strong operating team that had a successful track record and a leadership team that can close and perform. Price was important to them, as any seller should be, but the track record was the big decision driver. The combination was the key factors that enabled us to negotiate a purchase price of $15.7 million, which is below market price. This allows investors to choose between 6% to 8% preferred returns, depending on the initial capital investment they choose. Projected annualized returns are estimated to be 18% in range, which will be paid over 2 ways. 1, cash flow throughout the hold, and 2, proceeds from equity once the exit/sell, which we'll break down that a little bit later. Now, for this property, we'll be raising around $7 million. Operators will be personally guaranteeing the loan, which means our capital will be invested alongside your capital as well. We know that's important to you, as it is us. So let's look at some of the highlights and timelines. The investment is currently open to accredited and non-accredited investors. Preferred returns are 6 or 8%, depending on the initial investment amount. The minimum investment amount is $100,000, and we'll be receiving 6% returns. For those investing $2 million or more, those investors will receive an 8% preferred return. Funds are due by 11/22 and will be accepted first come, first serve. Distributions will be paid quarterly, beginning the third quarter after closing 3 full quarters to stabilize the property, and preferred returns is always accruing. So we will catch up as soon as possible. So let's review some of the highlights and the terms and the deals. The attractive debt terms. Debt remains to look very attractive. We believe that people will look back at the current lending environment and look back and say, I missed out on a once-in-a-lifetime opportunity to build generational wealth. Leveraging our lending connections and track record, we sourced a 3-year interest-only bridge loan with 2 one-year extensions that supports the business plan to be able to deliver on investor returns. Now, the whole time expected on this deal is about 3 to 5 years. If we can sell early, we'll review that based on market conditions, and if it's favorable, we can make that decision as a team. The strategy on this property is to reduce expenses by maximizing operational efficiency and increasing the rents to market rents by updating interiors and premium products. Also adding amenities to improve community and tenant experience, which we'll break down in a little while. So we understand that one of the ways to mitigate risk is to understand the market trends. There are 4 main influencers that shape where people live, what people buy, which is government, economy, technology, and society. We love where the Orlando market is going. Governmental perspective, Florida has no state income tax, where the US average is around 4.6%, and its tax system ranks 4th in the year's state business tax climate. Orlando itself is the 4th largest city in Florida. The economy continues to show job market increases over the last year, while unemployment is lesser than the national average. 122,000 jobs added year over year as of June 2022. The metro area has 13.4 billion in technology industry, employing 53,000 people, and is nationally recognized of innovation in digital media, agricultural technology, aviation, aerospace, and software design. Orlando has the fastest and highest growing tech sectors in the US. Greenworks is continuing efforts to guide Orlando on a course toward long-term sustainability. Lastly, the social influences places Florida #1 in higher education, #1 in entertainment and recreational facilities, #2 most diverse places to live. Again, these are some of the factors that influence us choosing to invest in the market, and Orlando continues to get us excited every step of the way. The breakdown is a quick snapshot of projected returns from the lower tier investor. This is for the $100,000 initial investment. It'll take us the first quarter to start getting rents where we need to get them. So 6% preferred returns will provide cash flow over the 5 years to about $30,000 when we sell the property. You'll receive an initial capital of $100,000 and the projected equity of $60,000. That turns that $100,000 to a final projected investment of around $190,000. We do not take projections returns lightly at all. Though we're very optimistic, we are extremely conservative. Let's jump into the investment overview. Those are some of the highlights of the deal. We'll be getting more into detail now. The property was constructed in 1985, 140 units over 17 one-story buildings. They are Cardinal Construction garden apartments, very commonly found here in the Florida market. 34 studios for 288 square foot, 96 one-bedroom and one bath, 576 square feet, 5 two-bedroom, one baths, about 854 square feet. These cozy apartments are in demand for working singles and small families. The sellers maintain the property well and did minimal upgrades over the years that they held the property, leaving a significant amount of value add opportunity for us to execute a meaningful strategy to increase rent revenue. The property is currently at 96% occupancy and is $300+ below market rents, which we'll review deeper in the comparables later. I know a lot of you guys are getting excited already. The community itself has laundry facilities on site and all-call maintenance. There's a full-time on-site leasing office and business center for the resident. Multiple walking trails and are available throughout the property. Each unit has its own private patio porch and ample parking throughout. Unit features have high-speed internet access, P-TEC heating and air conditioning units, and something unique that was the first time I seen it, an attic storage in an apartment. You heard that right. Larger units, 1 and 2 bedrooms, have washer and dryer hookups, and most units have carpeted flooring. Again, this gives us significant opportunity to add value, upgrades, and to create premium units, which Marcus will get into a little bit later. So this map is just an idea to give you a geographical kind of snapshot of where Orlando Sky is positioned. Relative to downtown, we're northwest by about 10 minutes. It's surrounded by a popular lifestyle and retail drivers. This location provides a wide selection of retail and dining close by and excellent access to Orlando's largest employers, pharmacies and groceries, fast food or sit down, as well as banks and business parks. Even the access to existing hotspots. So much development continues in Orlando, which is one of the reasons why we love this market so much. One of those developments just 1 mile away is called the RoseArt District. This is a $1 billion plus mixed-use project that's aiming to redevelop the former Lake Orlando Golf Club to create a pedestrian-friendly neighborhood town center abundant with green spaces, Class A retail, and office space, and high-end residences. The RoseArt District aims to be the premier live, work, play destination of the region. In addition to creating jobs and boosting property values, the project also has an emphasis on sustainability. This provides more attractive residents for us who will frequent these attractions. And this is of walking distance from the property. Super excited about this development. Also nearby is the Packing District. So this is a 202-acre, $700 million transformational project led by Dr. Phillips Charities. It's centered at the intersection of Princeton Street and Orange Blossom Trail in Orlando, recapturing a defining part of the community's history while providing a vibrant base of living and commerce. The historic buildings will be repurposed, integrated with new uses, connected to dedicated public spaces by new and bold plan for urban trails and a new 100-acre public park gifted to the city of Orlando, dedicated to health and wellness, education, arts, and community and sustainability. The Packing District will also include a 39-acre public park coined City Park at the Packing District. On the southeast corner, north of John Young Parkway and Princeton Street. The park will include a 14-acre stormwater lake, 26 acres of open space, 6,000 square foot, 2-acre dog park, and surrounding walking and bike trails. Again, more boost to the local economy, property values, great positioning for Orlando Sky. I'll let Marcus go into the next one.
Sounds good. So you all can see why we're so excited about this opportunity here. Again, my name is Marcus Turner, and I'm going to spend a little bit of time here talking about our asset, the Orlando Sky Apartments, and what our plan is to take advantage of the upside in the market, to systematically handle the deferred maintenance here on the property, and ultimately to increase the overall value of this property so that the returns flow back to you all, the investors. For this project, we're going to be teaming up with AMC as the property management company for this property. AMC is a premier property management company. They currently manage over 130,000 units across 30 states, and 35 of those properties are located right here in the Florida market. So they're definitely very knowledgeable and experienced in what they do. And unlike a lot of property management companies that are focused primarily on running operations and trying to keep the occupancy levels up, AMC further incentivizes themselves to also drive revenue higher, which is obviously exactly what we want here. AMC was present with us on site during the due diligence inspection. They walked each and every unit with us. And if you can go on to the next slide, we identified a few projects during our due diligence inspection that we'll want to handle to increase the overall curb appeal of this property. The exterior paint definitely needs a refresh. So we're going to take this opportunity to move away from this retro blue paint scheme that they've got going on here and update it with something a little more modern. We've also going to power wash the siding on each of the buildings so that the entire community gets off a nice, freshly renovated look. We're also going to be rebanding this property while we're at it with some new signage, a new name for the property. We really want to tie this property in with that path of progress revitalization that's occurring in the nearby RoseArt District. So we'll come up with a new creative name for this property that allows us to play on that. The landscaping for this property, one of the great things about it is that there's a ton of wide open green space, mature trees, mature landscaping. It really gives off a nice quiet vibe to the community. At the same time, though, some of those trees do pose a potential risk to us. You can actually see it in the picture here. Some of those trees are going far too close to the property. And in some cases, they're growing over the roof. So one of the first projects that we're going to be doing is trimming those trees back, maybe even removing some of them in locations that we have to, and replanting them a little bit further away from the property so we maintain that foliage in the property long term. We spent some time at the property at night as well, just kind of observing what was going on. There was nothing noticeable, but we did notice there's definitely some dark areas in the property, especially on the extremities. And we want to create a community where the residents feel safe and secure coming back to it at any hour of the night. So we'll be adding some additional lighting throughout the property to help ensure that. We're also going to be repaving the parking lot to refresh it and make sure we handle any of the damaged areas. And once again, just give off a nice, clean, revitalized look to this property. We're going to be installing gutters on the roofs of all the buildings. Some of the buildings right now do have gutters, some of them don't. Of the ones that do, they're all clogged up right now. So we'll be implementing a maintenance plan to periodically check those gutters and make sure that they remain free of debris to ensure that we get proper water drainage away from those buildings to prevent any soil erosion. If we move on to the next slide in our unit interior plan, these pictures right here really do give a good picture and a good sense of the general state of all the units in the property right now. They're in what I like to call a vintage state, which is pretty much identical to how they looked originally. Some of the units do have upgraded flooring, resurfaced cabinets, but for the most part, there's still a ton of value add left to be captured in each of these units. Our plan is going to be to make light renovations to the unit interiors as we turn the units to new tenants. So the next slide, we will show exactly what our unit interior plan is here. So we're going to take care of the paint. We're going to be replacing the flooring in areas where the carpet can't be reused. Each of the units right now does have a PTAC. It's just a package terminal air conditioner. It's a wall-mounted AC unit. For those units that have them, a lot of them either don't work or they only half work, which has forced many of the tenants to have to go out and buy their own window-mounted AC units to get cooling. And it's a tough sell trying to tell a tenant that we're going to raise your rent up to market when they got to go out and supply their own air conditioning, right? So we're going to handle all that, get those window units out of there, and really make this a nice community for all the tenants to live in. For the kitchen remodels, we do want to create a few premium units in the property that come with, new countertops, new cabinets, microwaves over the stoves, backsplashes, stuff like that really command top market rent. But we're only going to do a few of those. And really, we're going to do that really just to show the next investor that there's still a lot of what they call, meat on the bone for them and what they could do with this property. And when we exit in 3 to 5 years, all that construction in the RoseArt District and packing district will be in full swing. So the next investor is going to look at our financials. They're going to look at our rent delta that we're getting between the most of our units on our property and those few premium units that we put in there. And they're going to start to lick their chops about, what they can get as far as projecting out if they installed a few more premium units, which is going to make it a beautiful exit for us and the returns of what we can do with this property. But for the most part, during our hold, our kitchen renovations will be light. They'll consist of, painting of the cabinets, adding handles, knobs to the doors and drawers, improving lighting above the kitchen, stuff like that. Same thing for the bathroom renovations. We're going to handle that on a case-by-case basis, replacing faucets, shower heads, replacing the bathtubs or resurfacing the bathtubs as needed as we turn the units. And we also noticed that there were a good amount of units in the property that had damaged blinds. So we'll be replacing those as well and staying on top of charging the tenants moving forward, of course, if they continue to damage those type of things. We can move on to the next slide. All right, so the takeover process, there's going to be 3 phases to our takeover process here. And really, the takeover process is a really critical point for establishing new relationships, removing tenant concerns, building momentum towards our value add plan for the property. So the first step is going to be the reaching out to each tenant personally to inform them of new management, work with them to establish, good relationships by handling their outstanding maintenance requests and really just showing them that we'll do what we say that we will. Phase 2 of this process is really about setting proper expectations within the community with regards to our operating procedures for the property. So to do this, we'll start off by, evicting slow or non-paying or troublesome tenants, as well as implementing a more stringent collection and tenant screening policies for the property. Any tenant that has a lease that's expiring in the next 90 days or so, we'll reach out to them and contact them to see if they want to continue at a higher rate or if they plan to vacate. And this will allow us to better prepare for unit renovations, reduce the turn time for each unit, and more quickly capture market rents as we bring in new tenants. And phase 3 of this it really does happen simultaneously to phase 1 and 2. Here we focus on capital improvements like the exterior deferred maintenance, upgrading unit interiors, and hosting community events for the tenants to enhance the overall feel of our community. So for the next slide. Is it still me or are we gonna pass it?
Yeah, I'll take over,
All right,
Marcus, from here. All right, so who's excited to talk about the numbers? All right. Okay, so you can see on the left side of your screen, that's how the current units look like. And the intent is to do interior upgrades. On the right side, you see a exactly similar property within a 2-mile radius. That's our competitor property. And the intent is to upgrade the units on this Orlando Sky property to basically bring it up to par to attract top market rents, right? So that's all baked into our business plan and into our numbers. So we're going to talk a little more about how we're going to execute the business plan. So Marshall, if you can go to the next slide.
I just want to say I wonder how many people actually get excited about the numbers. There's got to be a mix. I know that. I love that you get excited about the numbers. This is why it's teamwork, man.
There you go.
About the numbers.
Absolutely. There you go. Ryan definitely does. All right. Okay. So, a key to any, business plan is basically honing on your expenses, right? What are the strategies you're implementing to reduce your overall expenses by improving your operational efficiency, right? Currently, we are, teaming up with AMC, who is, very proficient in managing properties in the Orlando market, along with, our phenomenal, operating team here. The intent is to, basically implement, simple operational efficiency that's going to basically, drive our bottom line up. The intent would be to have, overall 6-figure value add, bottom line increase by making sure our expenses are low and, and we capitalize on the low rents. So, as, Yannick and Marshall previously mentioned, the the rents on this property are, roughly $300 to $400 below, the competitor property. So, that gives us a huge potential, to make an impact on the bottom line and increase the overall value of the property. How we do that is implementing our business plan, keep it simple, make sure the tenants are happy, and, keep an eye on your expenses. So, so that's that's all baked into our, underwriting. And, we'll talk about the numbers here a little bit more on the next slide. So if you can go to the next slide, please. Yeah, so, just sticking to the capital expenditure breakdown. So we have roughly $1 million, budgeted for our, capital expenditures. Majority of the capital expenditure is going to be on the interior upgrades, right? Because, they're like, Marcus mentioned, there's so much meat on the bone on this property. The existing owner, had not renovated the interior units, right? Most of them are in classic conditions. That's where you see the majority of the budget for renovations is on the interiors. Plus, there is tremendous amount of opportunity to update the exteriors too, right? Along with some of the upgrades we're going to do to our roofing and repaving. So following our business plan with respect to the capital expense and the places with the capital budget is going to get applied. It's going to give us an opportunity to basically bring out this property, to our comparable properties to make sure we track the top rent. So yeah, going on to the next slide, Marshall. So yeah, so the fun stuff, right? The return summary. Yeah, let's go over the return summary here real quick. Before we go to what the return summary is, here's our anticipated sources and uses of the funds. So if you look at the bottom section on the left side, total loan amount on the property is going to be roughly around $11.7 million with investors' equity at around $7 million. Now, the right side represents where the investors' equity is going to get used, right? So down payment is going to be roughly around $4.7 million, along with some of the costs you have to pay for loan points and closing, right? And then we also have acquisition and guarantor fee that's going to get paid for the to the GP, right? To make sure we implement the business plan to maximize our return to the investors. And also, we have funds going to cover our first year insurance, property tax reserves, utility deposits, capital reserves, and then the CapEx budget, which is not going to get covered by the bridge loan. So the total sources and total cost of the property is roughly around $18.7 million with the breakdown. I think you have this slide deck on recording. So if you have any further questions, please feel free to reach out to me. We'll go through a lot of numbers. I know numbers is not everybody's forte or fun stuff, but I'm here to answer any questions. If you can go on to the next slide, please. So this slide basically gives in a summary where we are with respect to our current takeover and where our year one pro forma is. As you can see, the property represents a potential, a huge potential opportunity to bring it up to market. So you can see the top line, the gross rental income, where it is at right now. There's a big difference to where the year one pro forma shows. Also, the operating expenses along with the NOI, you see a big difference, right? Because how are we going to manage the property? At the bottom line, the intent would be to increase our overall cash flow for taxes, so that we can meet or beat our investor returns that we're projecting. You can go to the next slide, Marshall. So what are the splits, right? So the projected return is roughly 18% ARR, right? And the split is 70% and 30% between Class A and Class B investors. And after 19% ARR, the split is going to be around 50-50. So that just shows us the confidence in the deal and on the business plan, which we're trying to execute. A huge potential opportunity to meet or beat our projected returns here. One thing to note here is there are certain fees associated with the overall operations, which is your asset management fee, which is accounted for at 2%. And then we have our guarantor fee at 1%, our acquisition fee at 5%, which goes to the GP. If you can go to the next slide. Again, what more numbers here, right? I love this. So, this is a brief overview, guys, on the 5-year pro forma and budget. I'm not going to go into, into the very details of it, but you could see, our gross potential rent, year on year, we're projecting, in our underwriting to increase over 3 to 5%. However, the Orlando MSA, has a year on year increase of rent to roughly about 18%, right? So what that tells us is our forward projections are very conservative, with respect to how the rent is going to grow in the market, right, compared to what it has done in the past few years. Overall vacancies, are roughly going to be around 6 to 7%. You would see in the first couple of years after year one, we are projecting when we're doing the renovations, the vacancy is going to be higher. So that's all baked into our underwriting. And then we also have accounted for, some concessions and bad debt into our underwriting. So, the total rental income, is going to be around $1.6 million, which would, increase over the next few years. And then, there's also, utility reimbursements. That's another source of income, right? We'll apply the RUBS program, as well as other income with respect to, on-site, laundry machine we have accounted for. So, from a bottom line perspective on our operating income side, we're roughly projecting, around $1.8 million of operating income, year one, which is going to grow, per the business plan, as you can see on the 5-year pro forma. So if you can go to the next slide, please. Again, on the operating expenses side, right, the topmost operating expense, on any of these acquisitions is going to be your taxes. The taxes have been, in our underwriting adjusted to the acquisition, price, which is, of course, increases your overall, tax expense. And then, we do have payroll expenses accounted for in our, business plan. AMC is going to be managing, and and they have already reviewed the pro forma, and they are in total alignment with our overall business plan, right? We have also accounted for repair and maintenance at around $400 a unit in our business plan, plus insurance. Everybody knows that recent spike in insurances. So we have quotes from the preliminary quotes from the insurance agencies, which we went off of, and we use the most conservative number in our insurance number. And then we also have utilities expenses, and management fee. Now the management fee, just to bring a point here, all the expenses are projected to increase at a 3%, year on year in our underwriting. However, the management fee, is going to be based upon our agreement with AMC. And one of the other expense that you would notice is the asset management fee, which I discussed earlier, which is roughly at 2% of the effective gross income. That's going to be paid to the GP team. Plus, we have also accounted for any cost that we would incur to market the property, right? To make sure the property attracts the tenants in the marketplace. So the bottom line is our underwriting is conservative with respect to how the market is actually performing in the Orlando MSA, so that when we go ahead and execute our business plan, we are pretty well situated. You can go to the next slide, Marshall. All right, so I'll hand it over to Marshall to go over the market overview. Yeah, Marshall, all yours.
Awesome. Thanks, Rishabh. So let's jump into some of the details of the market and why we love Orlando. I mean, it hits all of our major indicators, right? It has the robust job and employment market. It's close proximity to major employment centers. It's surrounded by lifestyle and retail drivers. What's really, really interesting is that, on CoStar, which is a report that we leverage very much here in the real estate industry, Orlando, it shows, is experiencing one of the strongest multifamily markets in the US with high rent growth, booming development pipeline, and growing population. So as new residents continue to be priced out of the housing market, rents, are rising throughout the market with new builds catching top dollar. This historical performance has brought investors from around the globe looking to invest in the Sunbelt market, ultimately creating, competitive investment landscape, but with no signs of slowing down in population growth or construction. Orlando just continues to be like a prime market for multifamily investors who are really trying to chase those high yields. So I will go ahead and touch on a little bit about demographics. So demographic trends is one of the most important things that we look at when we're talking about apartment investing, right? Demographic trends are extremely favorable in apartments because when we get to particular regions that experience net migration, that's what we're helping do here. We're helping new and seasoned investors like yourselves crack into markets like Orlando. So from a population standpoint, we like cities that have over 100,000 in population, which of course Orlando checks some of those boxes, and a median age of 36. So the average household at 2.9 with a median income over 45,000, which is right in line with the demographics that are favorable to apartment investing. The Orlando market itself is a primary market with over 2.5 million residents, low unemployment rate, high job growth rate. It has a current rent growth increase of 18%, I believe you said, Rishab. You can see here, the average rents are closer to 1,800, which I'll show you later how far from that we actually are. So, Orlando just happens to be one of those top US travel destinations that we get to capitalize on, not only for the mild average year-round weather, but also due to major events and convention traffic, with Orange County Convention Center just being the second largest convention center in the whole US, Disney World being the #1 most visited theme park in the world, resulting in Orlando being the #1 tourist destination in the US. Great part about this market in Florida is also that it's landlord friendly, which of course we love. I know Yannick touched on this earlier. Florida is also ranked the #1 in higher education, with many large universities nearby, which offer a lot of partnerships with a lot of the largest local employers here. Valencia College, only 6 miles from us. It's the oldest community college in the area. UCF, which is the largest state university in all essential part of the state. Adventist University, not far at all in, is also affiliated with Adventist Healthcare, which is home to one of the biggest health networks in Orlando. And then of course you've got Rollins College, which is a private university, but it's been there since 1885. And that offers a lot of great, I think over 30 undergraduate majors. So, this is just an overview, which you'll be able to read more thoroughly in the business plan once you guys enroll in the actual portal. But this is just showing that it has excellent access to Orlando's largest employers in all different directions, right? And a little bit more about our property and kind of what we look at from a perspective of market, right? Orlando Sky is a C property in a C area. It's 15 to 20 minutes in all directions from different kinds of shopping. You've got Altamonte Mall, you've got Winter Park and Park Avenue, downtown Winter Garden, you've got the Mall of Millennia, you've got International Drive, which is, where the tourist corridor is. I feel like you're making faces because I'm talking about the shopping.
You are.
I probably shouldn't know so much about where everything is, right?
Listen, some people get excited about the numbers and some people get excited about the shopping.
All the husbands are cringing, right? So it's okay. It also has close proximity to major roadways. We're only 5 minutes from Interstate 4 and 10 minutes from Interstate 436. We're 20 minutes from all the major entertainment points like the Amway Center. So if you're going to catch like an Orlando Magic game or a concert, we're also 25 minutes away from, of course, Disney. Now the good stuff. So to get a really better understanding of the value potential we look at comparables in the area and other properties, just to give you a better idea, an apartment complex functions like a true operating business, right? The value is determined by the cash flow profits of the asset. So understanding the market, identifying how above or below we are is important for us to look at. The factors that we survey are assets asset vintage grade of the property. We look at the distance to our target property. We also look at the amenities available and that we're planning to add. And we also look at the comparable unit size. So as you can see here on this slide, you know, the two biggest comparables is going to be Kensington Villas and Orlando Terrace. Just from a unit mix, right? You're already looking at us being below market rent in the studio space, right? We are already below rent over $300 there. On the one bedroom space, right? We are also, again, over almost 200 from the next space, as well as 400 from the top rent. In the two bedroom space, well below 300 plus and 400 plus. So we are really, really excited about being able to push the rents in the area, as well as all of the supporting, you know, variables that we look at. And so this is just a little bit of understanding where we are in competition to the actual rent premiums for the nearby areas. And the so from an efficiency standpoint, we are definitely always 300 below, one bedroom as well, and 400 below on the two bedrooms. Now it's really interesting because what we looked at even just most recently this morning was there was 276 square foot comparables, which are right now currently going for $1,000 a month. As you can see, ours was a little bit more square footage than that for that efficiency, but we were only charging less than $800 a month. So I think, you know, just being that we are already out of the gate without renovation, you know, we believe that we can catch up and achieve the increase that we're looking forward to. So I'm going to wrap this up because I know that we've been doing a lot of the talking. So we'll just talk about a little bit about next steps. What you will do is your actual investor relations partner will be able to go ahead and get you set up. So expect a follow-up email from them for the portal, which we will also put in the chat, where you can go in and create your soft commitment. And then that's where you'll be able to go ahead and look over the documents. You'll be able to, you know, take a deeper dive into the actual business plan, look at some more photos and maps of the actual asset, and then it'll also allow you to go ahead and fill out or contact any of us as needed. Let's see here. So you've got some FAQs, and then I'm gonna leave this on the actual screen. So if you guys want to take the QR code to be able to go ahead and get onto that. And then I think we have time for a few questions. Do we have any open questions left? Let's see.
So there are quite a few. So there's a question from Jamal. He asks, what is the occupancy, the current occupancy?
Rishab, do you want to go ahead?
Yeah, so the current occupancy is roughly around 96%.
Awesome.
Yeah, so
And then,
yeah, go ahead.
No, go ahead, Rishab.
No, I was gonna say, you know, you know, the demand in this area is like pretty high, right? So that was one of the, you know, key factors for us to, you know, zone in on this property too. So, you know, the occupancy, you know, just talking to, you know, the property manager, which is on site, you know, was very friendly during our, you know, due diligence process. The occupancy and the demand on this area consistently has been, you know, really good.
Rishab, sorry, this is Lindsay from MFCP, and I will jump in just on that, just kind of to, I guess, drive home how well the market is doing versus what this property is currently doing. When we were on site during due diligence, I remember the managers, you know, she's really excited and she's like, yeah, we're 99%, we're going to be 100. In my head, I'm going, well, your rents are too low, you know, I mean, to me, I'm never going to praise 100%. That's going to be my next question. Raise your rents, they're too low. So, and that was achieving, I believe, a little over that $1,200 mark on their units as is. So again, that just, to me, helps solidify the business plan, you know, showing up what we're going to be able to achieve and running that property, you know, to me, even like 98 is just too high. It means we're just not, you know, pushing as hard as we can. So I'm excited to jump in and be able to get operating on this deal because there is a lot of rent to be achieved here.
That's a great point. Thank you for pointing that out.
Thanks, Lindsay.
There's another question that's asking about the cap rate in that area.
Yeah, so the, you know, the cap rate, you know, is ranging around
4.5 to 4.9, in the area, depending upon, the class of the property, right? So, that's the range on the cap rate.
Awesome. Okay, and then the next one is, if Orlando Sky is a Class C, are your comparables Class C?
That is correct. I think the slide that shows comparables to, rent for, two other properties, they are, Class C properties too.
Awesome. I know that just as coming from a sponsor, we take between 3 and 5 properties surrounding the same year, the same unit count. There are a lot of factors that go into account to actually qualify as one of the comparables.
That is correct.
All right, here's another one from Vanessa. It says, are we considering insurance to increase because of the recent hurricane in Florida? Also, what's the interest rate we got for or actually, Rashab, I saw you were on top of it. You answered the interest rate already for the bridge loan, but are we considering insurance to increase since the hurricane?
The numbers that are in the underwriting, they do account for what we anticipate from talking with our insurance broker, even with Nicole and being in a moratorium, that is including any anticipation. So we feel confident that that number will not be exceeded that is currently in the underwriting.
Perfect. And then are leases going to be 1-year terms or month to month? Or what are the terms that we are projecting?
So
I'll jump in and answer that.
Yeah, Lindsay, go ahead. Yeah, Lindsay, go ahead and answer that. Yeah.
That is really going to be just dependent on the day that we close and taking each unit on a case by case. If somebody is far below market rent, we are only going to, based on the increase they take, we may only do a small, shorter 4, 5, 6 month lease term so we can get them again on the rebound. If it's somebody paying closer to the market or takes a higher rate, then we probably will allow them to sign that 9, 10, 11, 12 month lease. Always making sure that we're monitoring when they expire to not overextend ourselves in any period. But me personally, I don't ever like to go in with this is a for sure, because it is dependent on each situation and what they're paying.
Perfect. Thanks so much, Lindsay. Okay, Tamara says, what's the definition of Class C? She's used to single family or 4 family rentals. Does someone want to explain that?
Marcus, do you want to take that one? Marcus, did you want to take that one?
Oh, you're on mute.
I can jump in if he's not able to.
Audio issues. Yeah.
With the C class, so the C class really is just a matter of, the exterior, like the vintage of it, how well it's been maintained, or it's really not necessarily like location. It could be a number of things. So for Orlando Sky, we're calling it or classing it a C just for the fact of it does have the original 1984 interiors. The exterior could use a little love on bringing the landscape up to where it should be. So that's where we have it classed as of today, with the plan of bringing that to a B.
Yes, that's correct. So the plan is to reposition the property, right? The property is located in a very good area, and once we implement our business plan, the intent is to reposition this from right now a Class C to a Class B property.
And I would say the location is already a B. It's just
That's correct.
Given it the TLC it needs.
I'm just going to add my 2 cents here. I underwrite hundreds of deals. So, when this deal came across, I was really excited because, of what upside this, investment opportunity presented, right? And, especially in the market, as we have right now with rising interest rates and rising insurance rates, this deal, was the gem that, we were able to, get our hands on. So, I got really excited once, we started looking at the deal and we started talking to, Ryan and Lindsay, and, so, really good opportunity, to capitalize and implement our business plan, to basically bring the property to what it deserves, right? So.
That's perfect. And then Tanya is asking, what is the loan interest rate?
So, Tanya, is roughly around 8%. To be exact, it's around 7.9. It's 7.95%. And 3-year interest-only bridge loan with an option to extend for 2 years.
Perfect. And then after the upgrades that we're projecting, what class do we feel that Orlando Sky will move to?
Yeah, I think Lindsay mentioned it earlier. I think the intent is to reposition this as a Class B.
Awesome. Okay, so as far as the underwriting and the cash flow goes, what does that look like with amateur? You guys, I can't say it. I need carbs in order to
Amortizing. Amortizing.
Thank you. Yes, thank you.
Yeah, so the cash flows of the properties, of course, projecting a positive cash flow starting year 1, but that's basically going to increase once we are done stabilizing the property. That means like once we are done implementing the business plan. So the first year cash flow is roughly around the bottom line is roughly around 4.5-5%, but that obviously increases as we implement our business plan to 8, 11, and 13% as we go into the consecutive years.
Awesome. I think that's it.
Y'all, I think that's all the questions. That was amazing. Any other questions? I know we're 2 minutes over, but we want to make sure and get your questions answered. So if you have any more, last chance, y'all. But I'd say that's a good sign if we answered already all the questions and nobody's jumping in. Oh, see, okay, Vanessa does have a question. Now, could we have a copy of the presentation? Absolutely. This will be sent out to you so that you can rewatch. The business plan will also be available in the portal. So reach out to your representative and they'll make sure that you get not only a copy of the presentation, but a copy of the business plan as well. All right, there's another question from Allison, which is a great question, by the way. She says, what are some of your projected challenges? Does someone want to take that one? Lindsay, do you want to, or Rashab, do you guys want to explain some of
Yeah,
the?
I can jump in.
We're
Sorry,
always
I'm
gonna
just
have
trying to
challenges.
run through. I'm just trying to run it through my head. 'cause
Sorry,
I don't want,
sorry, I
not
was
to-
typing on the other screen. There were some questions regarding emails and whatnot. But yeah, Lindsay, you can go ahead. I can chime in.
So as far as things that we're worried about is there's nothing big that just sticks out. Not to say that there won't be, because there's always going to be unforeseens that come up. As far as the challenge just out of the gate, it's always that fine line and that balance of keeping emotion out of it as we're going in with management and raising rents and people that are far below, and there's always that hard part. I hate to see people move, but it's that challenge of, okay, we need to focus on getting the team on board with us and helping people understand that we're not trying to be the bad guy here, that it is, we're just coming in doing really just what the market's doing, which that's why we've partnered with AMC for their strong abilities to do just that. We spent a lot of time on site and just going through reporting. And again, as far as a challenge, I don't want to put off, the persona that we don't think there is any, but there's really just nothing that sticks out to me that would be detrimental or a big issue, or honestly, we wouldn't be pushing forward at this point. I guess one thing that could potentially be is just the timing of getting materials to do upgrades, just because of what's been going on in the economy. So we just need to plan accordingly.
Yeah, I think I would call it an opportunity, not a challenge, is the the turnaround on our upgrades, right? Because there is a tremendous amount of opportunity on this deal. Turning around this property with respect to the business plan we have, it's going to require, very concerted effort and a laser sharp focus on, on our day-to-day operations. And we have the team here. So we have, obviously, our sponsors, MFCP, along with, Lindsay and, AMC, and, to make sure that we execute our business plan and get to that, the rent that we're expecting, because the property is like $300 to $400 below market rent, right? So that's an opportunity, in my opinion.
And I think something to add too, that maybe, I don't remember hearing that we chatted about it, but on the capital expense budget, we were able to negotiate a $500,000 credit. So if we do have any unforeseen, things that do come up, we do have a nice cushion for that. So that's something that we were really excited to be able to negotiate after the due diligence. So we'll be keeping that also in reserve just in case something does come up, right? Any other questions? I see some hands raised. Let's see who raised hands. No, I think we're good.
Oh, there looks like there are a couple other questions in the Q&A. If you want to take time to answer those.
Yeah, so I can take the first one here on the closing of the deal. So, the closing date on the deal is going to be in the third week of December, before Christmas timeframe. So that's the timeframe of closing, Solomon.
I will say on that note, Melissa, maybe if you want to jump in here and maybe talk about, but closing on the 19th of December is going to be big for us because of cost segregation. Maybe you want to touch on that a little bit and what that benefit is for our investors.
Of course. So I'm sure that plenty of you are looking for depreciation for this year, which is something that as operators, we are constantly wanting to find opportunities that will support allowing our investors to participate in the tax benefits of multifamily. And that's what, by doing a cost segregation study, that allows you guys to appreciate or to continue to support the depreciation. So essentially what that means is y'all just get a tax credit. It's looked at as a loss, but it gives you the ability to really offset a lot of your gains, your capital gains throughout the year. So this will be huge, especially in 2022. So 2022, you receive 100% of your depreciation. So they're saying you keep your money in your pockets, which obviously we all like, especially with the shopping district by this property. I mean, you catch my drift. But really in 2023, they're already talking about how it's going to be decreased to 80%. So this is huge for you guys as investors. And there is a question that says, if we invested 100,000, then we won't see our return for 3 to 5 years. So how this opportunity is structured is we provide a preferred return. That preferred return gives you that promissory cash flow during the hold time, right? So it's a way as operators that we can say, look, we trust our ability and our experience and our track record to really support a cash flow. So the bulk of your return is going to be at the end of the hold period. So yes, 3 to 5 years later. However, during the hold period, you're going to be receiving that 7% preferred return. And that 7% preferred return is annually. So you'll receive a distribution each quarter. Okay, this one says, are there any laws that would prohibit the raising of the rents to market value?
No rent controls in Orange County.
So there are no rent control laws in the Orange County. So right now there is nothing prohibiting us to follow our business plan with respect to bring the properties rents to the market rents.
So, and to answer this question, it says, so do we get 6,000 a year until 3 to 5 years? That depends on your investment amount. So we project that the property will be able to support a 7% preferred return, which if you invest 150,000, that equates to about 10,500 throughout the year. So then if we divide that by the quarter, it's roughly $2,600 a quarter. Now, one of the things that you'll want to keep in mind is we're doing distributions 3 quarters after we close. And that doesn't mean that you guys miss out on those distributions. That means that we have a provision in place saying that as we're getting the property stabilized, you'll be able to receive those missed distributions at the end. So the moment you guys invest is when your interest begins, and that those 3 quarters where we're building up the stability of the property, you still are going to be receiving those distributions. It would just be tacked on at the end.
Hey, Melissa,
Thanks, Melissa.
is there any other questions?
That's it.
We didn't miss any questions, Phil.
Sarah, if you have a question, you can type it in the Q&A box.
Yeah, I see you have your hand
I
raised.
think you have your hand raised. I'm not sure if that was from an earlier question. I think that's it.
Dr. Mo asked the question.
Risha, the question is, what is the current NOI?
Yeah, so the current NOI is roughly, around, $800,000, Jamal.
Perfect. As if there's no more questions, we are so appreciative of your time and space today. Oh wait, there's more coming
Oh wait,
in.
we've got one more. Okay, here we go. One
So
more.
the current, oh, sorry, if you were gonna, I
No,
don't.
you're fine.
So the current cap rate right now, because it's a value added acquisition, it's 5.81. That's the current cap rate. Sweet. No more questions, you guys. It's okay if you still have questions. Don't hesitate to reach out to your representative. They'll make sure to get all of them answered, which you are bound to have some as you go through the business plan or as you're late in bed thinking, because that's usually when my best questions come to fruition. So feel free to reach out. Obviously, there are going to be some other questions, but I'm so grateful y'all jumped on. This was an awesome evening.
Absolutely. Thank you so much, guys. We
Thanks so
appreciate your
much.
time today. And we will be speaking to pretty much each and every one of you very soon. So thanks again. And
Yeah.
have a good night.
All right,
Have a good night.
go Aggies.
Go
No.
ahead.
Somebody saw my Aggie ring.
No, I was just getting ready to shit talk in the chat.
Oh my God, man, I love you, Henry, already.
Henry, I'm watching you. I'm
There
watching.
you go. Yeah. All right, awesome.
Thanks so much, you guys. Except for Henry, not thanks to Henry.
All right, thank you, everyone.
Take care.